wow, they chose violence, and I took one to the chin. And it's a little frustrating. I've been reflecting on it all morning. I have this drawing in here that I made a quick video, dropped it in chat for you guys in boot camp, saying like, hey, we're really gapping right up into resistance. Let's allow it to break out of this, pull back and hold, and really show a confirmed strength to this move, as opposed to just a gap up that stalls out. I literally articulated this, and for some reason still convinced myself, and I'll tell you why I did it. Again, I've been evaluating or assessing the error that I made all morning long, and I can tell you what got me this time. And it's been a while since this has happened, but look, the market is not acting in a way that we should be over trading, right? I've been saying this for weeks, right? And I got baited and I got punched in the face, right? It's all good. It was a half size position on a single unit. It's all good. I'm not really hurt much at all. It's going to be 2 to 4% max hit on this move, to the over 170% per year. I'll probably, I'm in the high 160s now over this, and it can't get much worse, okay, just based on this position alone. Anyway, everything's okay, but obviously I want to reflect, and I have to be honest with my decision making. The 3 M's framework, is it me, is it the model, is it the market? It was not the model, okay? It was certainly me, and was it the market? I can't blame it on the market, because this is price action we were calling. I was even able to, again, articulate this resistance zone. So the point I wanted to make there is, I think what I realized the error was this time, what got me here was overwatching the 5-minute charts and wanting to enter BE here, right? And I was seeing this push up, and I was seeing some little bit of flow into market internals. I was seeing the SPY look like it wanted to pop up out of this zone, and I was a little preemptive, right? I'm a human. I tried to predict as opposed to waiting and getting the confirmation that was so clear we needed to see. We needed to see it break out of the zone and confirm a move above resistance. And I did not allow that to happen. And you can see I paid for it. So I still appreciate that. I respected my risk profile. I only took a single half-size unit position, right? So I didn't allow myself to really get my ass kicked, okay? And that's something that I'll always do. But, I just have to reflect and be honest with myself. This was a little bit of a forced entry here in BE, and I clearly paid for it. Waking up today in Thailand. I was saying when I was recording that video, I didn't feel well. I wanted to go live last night. I was just tired, and, I've got a baby. I was up all day. I did 2 videos yesterday, and I wasn't feeling it, and I made a lapse in judgment on taking this position. A couple reasons why, I just detailed most of the real reason, but another reason was, why did I force this? If I'm looking for a 60-point move here, there's no reason I couldn't have let that candle close yesterday and look for an entry today. I'm looking for a 40-point move, and I was jumpy over a few bucks, and you can see what it got me, guys. So lesson learned. Still, as always, respecting that risk profile kept the damage from being too much. Okay. But yeah, look, guys, at the end of the day, there's just that slight frustration. And, if we go to my ES chart here, like I took a trade right in the no trade zone. I knew better. I saw like we were in a confirmed downtrend. I got baited, and I'm sure many of you did as well. Guys in boot camp, I've noticed that none of you jumped in. Way to go, okay? Way to go. You're listening, and you're seeing our levels, and you're controlling yourselves. That's what matters. You're controlling yourselves. Myself, I had a slight lapse of judgment. It was a model trigger, and I did mention that I was willing to take a single 1 or 2 quarter or half size positions, and I chose a single half size. And it was a trigger when it was happening, but the bigger picture here, this was avoidable, and I shouldn't have taken that entry. It's all good. We got to wait for confirmation. This was a moment when I was slightly predictive as opposed to reactive. But hey, enough with that. We've got to learn our lesson, move on, and we are going to jump in and do our watch list for Friday, November 21st. And market breadth, guys, things are nasty. All right, this was an absolute roll. What I want to say, the point that I would like to make here is shift in character, change in character in the market. That is what happened. So I don't want any of you to feel like you have to now get involved. Like, oh, it changed characters. Now let's roll into shorts. Okay, I'm going to give you some short ideas here today, but we don't have to catch the initial move. It's funny for me. It's sour that coming out of my mouth because I just did that last night and I know better. We didn't have, that was my point, when I did the pathing, let's go ahead and get just the daily. When I did all of the pathing is that, hey, we don't have to catch the pop up, right? Let's let it go. Let's let it take out and validate this lower high. Okay, and then pull back, and then let's buy this when it confirms, when it invalidates that lower high, pulls back, holds, right, doesn't roll over, but pulls back, holds, and confirms, we could buy that move up. So it's a little sour, but I'm still going to make the point. It is valid, and it is how we should be acting in these markets, right? We don't have to now be like, if this breaches today, oh, let's short the whole market. What we can do is let things play out. When the volatility is heightened like this, things are difficult, and you don't have to be so predictive. You don't have to catch the initial move. You can play the confirmation. So shorting right here, saying this is a breakdown, a breakout, whatever you want to call it, and let's short that. It's going to go down and test the 200. Okay, it might, but the higher probability play is letting things break down, okay? Go wherever they go. It could be here, it could be here, it could be here, whatever, but push up and then fail. And then this is the high probability short. Things we talked about all week, okay? So that's what I'm looking for, and while I'm going to give you some names to be watching, if you want the full watch list, guys, in Bootcamp, I gave it to you, but anybody in the channel, if you want my full list of shorts, you can pause the video and look at it, or just comment and I'll post a link in your comment if you would like it. Again, we don't have to predict and short right now. We can let the volatility cool off just a bit, okay? And again, my play here is letting things break down, push up, okay, and then fail a major level. All right, so this is the high probability short whenever we do push back up and if we roll again, okay? So that's what we want to do. And the other thing about shorts is I almost never do full size short positions. And the reason is because things can get very snappy to the upside, especially if you're playing the leaders. And in an initial move, a sharp pull down, I don't mind shorting some of the leaders, right? Like Quantum and stuff like that, or some of the other shorts that I've taken in the last couple of weeks. But now I do want to focus on my short list of leaders to the downside, companies that have been turds for months or years, okay? If the market gets snappy back, what it is that's at some point speculators are going to start trying to call bottom, and they're going to want to buy the best companies in the world on a discount, right? So you don't want to be in the leaders trying to short the guys that have been up all year that are pulling back, because if the market does reverse violently, those are the ones that are going to shoot up, okay, and stop you out. So you need a list of real turds. So I've got some here we're going to look at. And you guys hear me say it all the time. I like to trade the leaders in a trend backed by growing fundamentals. In a trend, higher highs, higher lows, respecting structure. It's not breaching that lower low. It pulls back, makes a higher low, and pushes back up and makes a new higher high. And that's why the triple R is so effective in a follow-through environment. Okay, so, but it's all the same thing to the downside. So guys, don't be afraid of shorting, okay, period. Just do not be afraid of shorting. It's the same thing. We're just buying puts instead of calls. If you need to, Option I will invert your chart, or you can right click here and do it on the sidebar. And any charting platform, you can invert scale. But if you look at this is a box breakout, okay, just to the downside. One of my favorite continuation patterns. But my point that I was making there is that instead of trying to short the leaders because you think, oh, these things were too high anyways, those are the ones that are going to snap back hard. We want the turds that have been in a downtrend, okay? The weakest stocks in the market. Look at this, is a 4.8 RS, okay? These are the things that if the market's going to be nasty and have legs to the downside, when these things crack, they're going to have follow through, and they're not going to snap back so hard on that one up day that happens in a downtrend, right? When we're rolling down and things are sharp to the downside, we have dead cat bounces, right? And the leaders, those are going to bounce 20%, whatever the number is, but the leaders are the ones that are really going to react to that up day, okay? And So we want to be in weak names if we're going to favor shorting. If we're going to get follow through in this market, I showed you guys, I want it to keep breaking down, pop up, and then roll again, okay? And we'll short that roll. And here's some of the names that I'm looking at. This is a box breakout here. I've got the drawing in here, but I will do it again for you really quickly. It's very simple to see. We're looking for this guy to break out of the box, okay? So we don't have to predict. Let it break out, pull back, retest the box, fail, okay? And it's okay if it comes back in a little bit, whatever. But when that fails, okay, we're shorting this move right here with a weak market, with follow through to the downside in the market. Continued pressure, macro, whatever the deal is. If this move has legs in the market, if we're going to roll into a bear or towards a bear market, 20% from the recent highs, we're going to want to be shorting things. This one I like on the weekly. This is a weekly trigger here for me right there through yesterday's low is a weekly trigger. And here is another weekly trigger right here. So you've got a retracement, reaction, and a remount if you want to look at things to the upside. All right, we've got something trending. You get a retracement, reaction, and a remount. That was a trigger right there for triple R, but it's to the downside. Okay, and you can see that that worked. And we possibly getting another one here, a retracement, reaction, a remount. There is your trade. Let's look at this guy on the daily. Yeah, back over the 50. That's why I like this quite a bit. So you're getting back over the 50 here. Stop could be just below the 9, and you want to set a 2-to-1 as always. At least some of these, that's the thing. We're going to have to monitor the market. I would prefer to get 3-to-1s out of these, right? If we're going to get sharp, nasty in the market here for a while, I'm going to stop inverting, guys. I want to focus on the fact that we are trading downside price action. You get it. If you want to invert your charts, do so. Here's another box breakout, guys. You know the style we're looking for. Let it break out, pull back, retest, fail. There's your short, all right? Somewhere in that world, the 9 at that point would probably be curled over. And here's another one here, guys. So you can see how similar all of these look. You see these are just turds. These things are in a downtrend. And again, we're protected by those snapback days. Because if you think about the speculation that takes place in a bear market or a move towards it, if you're going to deploy capital, if anybody has any money left to deploy, people with cash on the sideline, why are they going to try to bottom tick these turds? RS of 3.5? Come on, man. Like, why are you going to try to pick bottom on these as opposed to buying the dip on some of the best companies in the world? Okay, so these guys are likely not to get the heat first. Okay, so you're slightly protected in that, and it's why I built out my short list here today. Guys, again, here it is. If you want it, if you want to pause, it's a pretty good list. A lot of these things look very similar. We'll do a couple more here. Some of this stuff does look really nasty, guys. Look at this guy, right? You can see how big of a gap down this thing was. A freaking 1 RS. I mean, just absolute turd here. Look at their fundamentals, guys. Just this, they are setting money on fire. It's not uncommon that with a gap down of that size that, you saw some shorts clearing out and it's pushing up, right? But if this guy rolls back under the 9, this is one of my favorites. I mean, you can easily get a 40% move there on the underlying, meaning depending on your expiry, that's a 200 to 400% move on those puts. Okay, and dude, I mean, come on, control your risk, right? Do a quarter size on this. Aim for 400%, so you would get a full unit reward while risking partials on a quarter size. That is asymmetric risk reward, okay? These are the sort of things we are looking for, and this list is full of turds, guys. So if you want to look for some dirty dogs to take out back, here is a list for you. Carvana breaching the 200 here. Look out. But I wouldn't say this is not exactly what we're talking about with the rest of everything else on this list. Is just a nasty, nasty look. Carvana, has been a leader here for a while, but I think losing this 200 is going to get nasty for it. It's on watch. And yeah, guys, let me end, just with a little bit of trader psych where my mind is, getting punched in the mouth is never fun, but at the end of the day, it's part of trading, guys. Okay, I got baited. Okay, it happens. That was a nasty one. At the end of the day, I have not seen I think we were up 2% and then just roll. I believe we were up more than 2%. Let's look at this here. Okay, about 2%. And then we rolled to close down to, okay, so there it is. It is a 4% move in the SPY in a day. Wow. whipsaw. So look, I mean, that's tough. I will say I do feel like I shouldn't have been involved in it. And that's a little sour again, as I've said, but guys, we're humans. We controlled our risk, okay? And we learned a lesson. And not only that, we validated what we saw, okay? We were right in the calls that I was making throughout the week and the levels that I was saying was important. It's too bad that I had to learn that by getting punched in the mouth. But it was validating to, what I saw was correct. And I just should have been slightly more disciplined or more patient. It's not that I wasn't disciplined. I needed to be a little bit more patient. I mean, I'm talking like 30 fucking minutes. That's the thing it's bothering me a little bit, that I just got a little bit antsy, and it is what it is, guys. But hey, what's key here is to not continue to be jumpy. All right, don't spiral. If you got punched in the mouth yesterday, all right, step back, dodge, bob, weave a little bit, okay? Chill the fuck out, all right? Maybe go back to the heavy bag and do a little more training. Don't trade this market if you're new to this, right? Or if you struggle in a trending market to make money. Do not touch a heightened volatility market, okay? That is like, this is built to trigger you. This is when you can really do damage to your account, okay? If you don't know how to scale that size back, do one position here or there at a time, right? That's the only thing I did right yesterday, was I controlled my risk properly, all right? It's not abnormal to take losers. I feel this one could have been a little avoided, but the thing is when the market gets volatile like this, it can make you spiral, all right? Don't get into a tailspin. If you need to step away, do so. And remember that what will very likely come for this is a correction that becomes an opportunity. Historically, that's what happens. If we do roll into a deeper correction, then think about all the weekly triggers we're going to have in a month or two, right? That is a fantastic time to get involved in the market. But can you be disciplined enough and raise your cash or keep your cash position, have dry powder there when it's time to deploy? Don't feel like you have to go short things because you see other people doing. If you're not comfortable with it, don't do it. I would encourage you guys in boot camp to at the very least be paper trading it, because I don't want you to be afraid of this. And if we get the confirmation to the downside, I don't want you to just be afraid of shorting because it's still structural and it's all the same things. So at the very least, guys, please do be paying attention. I gave you the list. Pay attention, and at the very least, paper trade it, okay, please, because it's a very powerful thing to be able to play the market both ways when in a follow-through environment, all right? So just don't get jumpy. Realize that we're getting freaking whipsawed back and forth, but if we breach and we roll into a follow-through environment, this is a high probability short, and I've been saying that for a couple of weeks. Just as I was saying, had we invalidated this lower high, this was a high probability long up here in that green zone. It's just unfortunate I didn't wait. Guys, that's it. Stay safe, manage your risk. Let's go make some money. I'll see you soon.